Last night the Fed didn't hike rates, and still sent the market crashing. Warsh's first cut wasn't to interest rates. It was to the script. The scariest part last night wasn't a hike, because there was no hike. Rates didn't move. But late in the session the market turned. Stocks down, bonds down, the dollar up. The reason is simple. In his first meeting chairing the Fed, Warsh told the whole market one thing: don't expect me to leak the plot in advance anymore. Markets used to watch the Fed like a TV drama. Every statement, every dot plot, every press conference, everyone hunting for clues. Which word was cut, which one changed from might to appropriate. But last night Warsh's first cut tore the script up. The statement was shockingly short. Rates unchanged, inflation still high, get it back to target. No build-up, no gentle hints. In plain English, stop guessing my next move every day. I'm not feeding you the answer anymore. That's the first signal of the Warsh era. The dot plot was even harsher. It used to hint at cuts this year, but this time the year-end rate projection was revised up. From maybe one cut to maybe one hike. Of 18 dots, 9 see another hike, 8 see no change, only 1 sees a cut. Inside the Fed it's no longer doves versus hawks. The hawks have flipped the table. But the most interesting thing isn't the 18 dots, it's the missing one. Warsh didn't submit a dot. He's not silent on rates, he's making a statement. This dot plot thing, I don't trust it. Markets treated the dot plot like a GPS. The Fed handed you a map, just follow it. Warsh is saying, that's not a promise, not a roadmap, not gospel. It's a bunch of people's snapshot today, and it can change anytime. That hits the market hard. Because for years, US stocks, especially tech and AI names, were powered less by profits than by rate cut expectations. Believe rates are coming down, and valuations can stretch much higher. So now the problem: no script, an unreliable dot plot, forward guidance gutted. How does the market price anything? There's only one answer: reprice uncertainty higher. So what really cracked last night wasn't a single rate number. It was the market's fantasy that the Fed will always step in to protect it. Now inflation. The forecast was revised up sharply, with core inflation lifted too. That's not a tweak, it rewrites the whole inflation script. The surface reason is energy prices, but what the Fed fears may be more than just oil. Here's the awkward part: the US economy isn't dead. Retail's still rising, jobs still holding. If the economy can take it while inflation stays hot, the Fed has no reason to rush to rescue the market. It's not too weak, it's not weak enough. So the market's core trade isn't when do cuts come anymore. It's 3 words: who breaks first? Scenario 1, oil breaks first, inflation falls fast, yields ease, and AI growth stocks catch their breath. That's the script the market wants. Scenario 2, inflation doesn't break, and neither do jobs or spending. That's trouble. The Fed really could hike, yields keep climbing, and tech valuations keep getting squeezed. Scenario 3, the worst. The economy starts to break but inflation won't come down. That's the stagflation trade. Stocks and bonds both hurt, while gold, the dollar, energy, and cash get repriced. And if you're in Australia, don't assume this skips you. A stronger US dollar pressures the Aussie. When Wall Street sneezes, the ASX, miners and energy catch a cold the next day. A lot of your super is global shares. This line runs all the way to your retirement account. My read: the market won't tip straight into a full bear market. But the brainless just bet on cuts trade. That's over. From here, US stocks enter a harsher phase. Not who tells the best story, but who can survive high rates. AI, semis, the space economy. However sexy the story, if the cash flow is too far out and the valuation too rich, rates will pound it again and again. So what Warsh really sent wasn't "I'm going to hike." It was something harder: "I will not manage your expectations anymore." That's the historic meaning of his first meeting. In the Powell era, the market got used to finding sugar in the Fed's words. In the Warsh era, the market has to find its own. You used to trade the Fed's hints, now you trade the data itself. Last line: this wasn't a rate meeting, it was a switch in the whole trading regime. Keep treating the dot plot like a babysitter, and the market will trade you the other way. Watch your wallet.